What's up, guys? How you all doing tonight? Odds I've got a Yankee hat on. No, not today. No Yankee hat today. Just a plain black today, guys. Plain black today. What's up, guys? What's up, crew? My team. My YouTube fam. I don't have my favorite hat on today. I have my favorite watch on today, not my favorite hat. Guys, we've got another insane, crazy day. Listen, guys, we're going to talk about on this live stream today, we're going to talk about a few things. We're going to talk about first, JFIN. Wow. Okay. Everybody kind of under the sun, every day trader under the sun was looks like we're trading this thing today. And we're going to talk about my trades in JFIN. I nailed a home run trade in this thing early in the morning. Then I gave back a chunk of those profits in the afternoon in a little bit of a rug pull type of trade. And I'm going to talk to you guys about the long setup on that JFIN in the morning. But really, I'm going to talk to you about how you manage risk on these real super high volatile stocks. Because a stock like JFIN is about as volatile as you can possibly get. There really isn't much more volatility than a stock like JFIN. This is cream of the crop when it comes to volatility, and there's certain things that you guys have to do to manage risk when you're going into to manage risk when you guys are trading a stock like this. So I'm going to talk to you guys about managing risk on these trades because a lot of traders are scared of these stocks. A lot of traders stay away from them. A lot of traders think, oh no, that thing moves too fast. That's not for me. And that's fine if you're not comfortable with the high volatile names. I love real volatile stocks like IMRN the other day. I crushed that thing. JFIN, I crushed it in the morning. Then I gave a big chunk of my profits back in the afternoon. We're going to talk about that. But I love these real high volatile names. I really do. It just, I don't know, makes me feel warm and it makes me feel alive trading these things. We caught another big trade on AVCT early in the morning as the small cap mayhem and the small cap momentum continues. But I think we are seeing the end. I know that might upset a lot of you, but you guys are going to hear it first right here. I think today marks the day of the beginning of the slowdown in small caps. I think that we have seen such exuberance and such insane, illogical, irrational buying in small cap stocks that there are so many bag holders now. When you look at stocks like GNUS, okay, let's actually do this real quick. When you look at stocks like GNUS, okay, you want to talk about bag holders. You take a look at IMRN. You want to talk about bag holders. Stock went to $28. Now it's at 10. Yeah, Jay.
Chesapeake.
Yeah. I'm about to run through all of them. Yeah, I'm going through the list, guys. So like IMRN from 29 to 10. Okay, JFIN from 30 to 6. Chesapeake from 77 to 17. GNUS from 12 to 4. OAS from 225 to $1. VAL from 225 to $1. DPW from 650 to $3. There are so many bag holders. Oh, Hertz from $6 to $2.50. There are so many bag holders now in these small cap stocks. And with what happens today in JFIN, I think this is going to be what kind of the straw that breaks the camel's back. I've been saying for the last several days that this action is not sustainable. I've been saying it for the last couple of days. This action's not sustainable. And you have to be able to still be consistently profitable, even though volatility slows down a little bit in these small caps. I've been pushing, just like a lot of other traders have been pushing. My last 2 days were massive days on Monday and Tuesday. And then we come in here today, and it started off huge again, and I gave a big chunk of it back. And I wish I didn't, because it would have been my biggest 3-day stretch ever in the history of my trading by far. But I gave a chunk of it back in the afternoon. So I'm going to start this live stream off by talking to you guys about the shift that I think we're going to start to see here. And I'm going to tell you guys my game plan moving forward. It's not that I'm not going to look to trade small caps tomorrow. Small caps are still going to be on my list. I just think that I want you guys to be a little careful moving forward on small caps. Don't expect stocks to go from $2 to $8. Don't expect stocks to go from 10 to 30. Don't expect those moves, because they're not the normal moves. They're not sustainable moves. And I think there's so many bag holders right now that's going to suck a lot of the momentum out. If you've been chasing stocks for the last 2 or 3 weeks, you've been making money on them. Look at the airlines. Look at the cruise lines. Look at Hertz. Look at the real cheap penny stock oil companies. Look at some of these other stocks that we've traded, like ABIO, GNIS, IMRN, JFIN. Look at all of these stocks that we've been trading, AESE. Look at all of these stocks that we've been trading over the last couple of weeks that have just gone crazy. They've just gone absolutely crazy. That creates a lot of bad habits. FOMO creates a lot of bad habits. Environments like this are great for experienced traders because we can push and we can capitalize on it. Like I said, 2 massive days back to back, Monday and Tuesday. Green today, but I gave a huge chunk of it back. But you guys, we're still looking at this momentum. Like I said, experienced traders, profit, push. Inexperienced traders that just start trading in this environment, it's actually very bad for a brand new trader to begin trading in this environment, because it gives them a false sense of success and a false sense of reality. And it creates very bad habits. It creates greed. It creates poor risk management. And it teaches you that it's okay to chase. It's okay to hold on to a losing position because the stock will bounce back. This environment creates bad habits. That's why I hate when a brand new trader starts trading in an environment like this. All the traders that I know that started trading because of the Bitcoin bubble or because of the cannabis boom, all of those traders, they made a bunch of money. They thought they were good traders. And then once the bubble burst, that volatility, when that momentum went away, they lost everything. So it's fun when you have the small caps that are rocking and rolling, that are on fire like this. But I want to bring you all back down to earth, because I think the momentum in small caps is going to slow down a bit now. I think there's just way too many back holders. Okay. So all of the traders with their Robinhood accounts that have no idea what they're doing, that chased JFIN at 25, that chased IMRN at 20, that chased Hertz at 6, that chased GNUS at 10, that chased, all of these stocks, that chased Chesapeake at 70, all of those traders, they're wiped out. They're wiped out. And I think we're going to get a slowdown in momentum. Okay, so moving forward, I don't want you guys looking for home runs. I want you guys looking for, I know it's I know it's tough for me to say this to you right now. You see, everyone's posting their P&L. Everyone's like, I made this much. Oh my God, look at this trade. Look at this trade. This stock's up 100%. This stock's up 200%. Oh my God. And it's easy to be like, no, keep going. But I'm telling you guys that today, I think I saw the start of the momentum is going to slow down in small caps. So I want you to be prepared for it. I want you to be prepared for it because I'm preparing my entire TTG family. I'm preparing all of us for that and teaching them to stay prudent, not to get greedy, okay, and stick to your rules, stick to your profit targets, stick to your stop losses, and don't let the last couple of weeks of momentum change your rules and change your strategy moving forward. I hope I'm wrong. I hope tomorrow we have 4 stocks that are up 100%, that give us follow through, that give us afternoon moves. I hope I'm wrong. But I think we're at a point where we're at max bag holder level, and I think we're going to get a little bit of a slowdown. So I want you guys to be prepared for it because I'm prepared for it. Where I'm going to start to look as things shift, if I'm right, if small caps slow down, I think it's possible we can see an uptick in volatility in the overall markets. Coronavirus cases are spiking in a lot of places. California, Michigan, North Carolina, South Carolina, Arkansas, Arizona, Florida, Utah, huge spikes in cases. The spikes that we're seeing now is the Memorial Day weekend crowd. This is the Memorial Day weekend crowd that went out and partied 2 weeks ago on Memorial Day weekend. Now, all of a sudden, all those people are sick. That's the spike in cases you're seeing this week. But let's think about this logically. All of those people that went out Memorial Day weekend that are sick now, well, they didn't know they were sick Memorial Day weekend. They passed it on to someone else. That someone else passed it on to someone else when they were protesting. So that Memorial Day weekend crowd spread the virus. That's the spikes you're seeing now, 2-week incubation period. Then that group of people passed it on to the protesters. Now, the protesters don't know that they're sick yet. 2-week incubation period. Next week and the week after, I think you're going to see another spike. So I think you're going to see Memorial Day weekend spike, protest spike. That's what I think we're going to get. And that could spook markets. That could spook markets. So I'm actually thinking that the timing of this, as far as a trader, is perfect. If I think small cap momentum is about to slow down because there's just so many bag holders, and at the same time coronavirus cases are spiking, I think we could see traders' attention shift away from small caps and into some larger stock, some larger overall market plays. That could be SPY put options. It could be the TVIX. It could be UVXY. I think volatility is going to start to pick up in the overall market. So this is where not being a one-trick pony comes into play. I teach all of our True Trading Group members not to be one-trick ponies. Don't just only trade small caps. The small caps get hot, they get cold, they get hot, they get cold. But when small caps get cold, I don't want you beating your head against the wall trying to push, a square peg into a round hole. I want you to be able to shift your focus and identify opportunity elsewhere and be able to trade it with confidence. So I am starting to prep myself. Like I said, I'm not saying this happens tomorrow. I still may trade small caps tomorrow. We got to see what the morning watch list looks like. But I'm preparing myself mentally for a slowdown in small caps and then an increase in volatility in the broader markets. We're already trading lower after hours. Okay, we're already trading lower here after hours. Okay, we're all the way down to 316.50. So you guys can see after hours, we're very weak here after hours. I know that after our sessions closed, we have the futures market. I haven't checked the futures market in the last 40 minutes since it opened. I have not. Since the after hours equity markets closed, I haven't checked the futures markets. I was just watching after hours on the SPY, and you can see that we're weak. You can see, where we at, Jay?
Dow Jones down a half a point, S&P down 0.38, NASDAQ 0.16, which is nothing. Small caps down 1%.
Wow, there you go. There you go.
And the VIX up 2%.
There you go. So we're already starting to see it.
Yeah, and guys, I watch futures a lot. That's why I'm always looking tired. I give 0 fucks unless the VIX is over 1.5%. You know, we'll see what happens at 11 p.m. We'll see if we get some injection. But you know what Mike was saying. This is what we've been telling you. You know, I did a stream on Monday saying everybody, you guys are going to get killed. Hold on to that money. You know, you guys have to understand that trading these things. You know, guys, look. Can anybody tell me what JFIN does? I bet you can't. You know, you know, you guys are take advantage of it while it's there. You don't need to might double dip today. He paid the price. You know, luckily for him, he crushed it on the first trade. If he didn't crush it on the first trade, he would have just gotten blown out. And honestly, you know, this is what you have to understand. For you guys that are new to trading, guys like me and Mike are selling right into you. And I know that doesn't sound nice, but, you know, there's going to be a winner and a loser on every side of the trade. And your goal as a trader is to be the winner and not be the loser. So you got to take your profit. This is where you have to be disciplined. Oh, wow. You know, like you make 50%, great. You make 100%, you take out your principal plus 70%, and you play with the rest. That's fine. But remember, it's capital preservation. How many people right now are holding call options in this market that are, you know, probably lofty at best? They're going to wake up and just get absolutely destroyed. This is going to suck a ton of liquidity out of the market from like the retail crowd. They're giving it all back. That CNBC trader that made $1,500 in a day, gone. He's back to the basement. You know, have a plan, stick to it. But, you know, you got to get used to taking your profit while it's there, because this is not a normal market.
It's not. It's really not. And I see a couple people that obviously think I'm wrong. And I very well may be. And, you know, a couple of you guys are saying, no, Mike, you're wrong. Listen, I hope I'm wrong. I love trading these small cap stocks. I love them. I'm crushing these things. I love them. I hope I'm wrong. But I've seen 16 years of action like this. And I'm telling you that this momentum in small caps is not sustainable. Small caps get hot, then they get cold, then they heat up again, then they get cold again. You guys will see it. I hope I'm wrong. But the amount of bag holders that there are out there right now, I'm telling you, this is how it happens every single time. I've seen it over and over and over and over and over. And you're going to just feel like, oh, every stock's going to go to the moon. Every stock's going to go up 300%. And then you're just going to hold on to your positions. And you're going to wake up one morning and you're just going to be down 50% on all of them. But we'll see.
Yeah, guys, and it doesn't matter if we're wrong or not on this. It really doesn't. Because guess what? Stocks go up, stocks go down. We're making money either way, in either direction. Because we know how.
Oh, man. Lou Dane, I am sorry, brother. You are the definition of a bag holder. Oh, my goodness. Lou Dane, do not fall victim to this exuberance, my friend. I'm telling you, do not fall victim to this exuberance. Do not fall victim to this exuberance. This level of content and this max euphoria, this is exactly what leads to backward. You said look at GNUS. I did look at GNUS. GNUS has a ridiculous amount of bag holders. The stock's at $4. It was at 12 4 days ago. Okay, you're talking about the stock has dropped 50% in just a couple of days. Yeah, if you're one of the people that bought it at $1, then yes, you're still up money on the trade. But I'm telling you, when you look around at some of these small caps, I'm telling you that this momentum is not sustainable. I hope I'm wrong. I hope this lasts for another week. I hope it lasts for another 2 weeks, because we've been crushing these trades, but it's not sustainable. So I'm trying to give you guys kind of the heads up that we're starting to see way too many bag holders, and eventually that will slow down momentum in small caps.
As well as headline risk. Headline risk is back, whether you guys want to believe it or not. You know, second wave of coronavirus, that's a reality. We've literally been talking about this since Memorial Day, that this was going to be the risk in 14 days. Now we're starting to see that. Now the protests, we're going to see that. And, I mean, you guys have turned on the news. You see how many people are out there? It's ridiculous. It's like a giant petri dish. So, you know, Lou, good job. If you're up, great. You know, you're the exception, not the rule, because most people that are trading these things don't know what the fuck they're doing. And they're probably not taking profit like you are. You know? So that's good. We're happy for you. We want everybody to make money. You know? we want this to continue. The only way that this continues is if you guys that are listening to this tonight are the ones selling into everybody else and not the other way around.
Yeah. So, all right. Anyway, moving on. That's what I think, guys. I felt a shift today. I hope I'm wrong. But I felt a shift today.
I hope you're wrong, too.
I love trading these things, man. I love trading them. I hope I'm wrong.
I mean, I came out of retirement today in small caps.
That's what it was. It was you.
I know. I came out of retirement. I didn't.
Hold on a second. Wait, hold on a second. Jason, I got to just say something. I got to address something real quick. Lou Dane. Lou Dane, you obviously do not know my background as a trader. Lou Dane, I've been trading for 16 years now. Started my career working at a hedge fund on Wall Street with $500 million under management and received the Trader of the Year award in 2008. So, believe me, my friend, you are not the only one that is an experienced trader. So when I share with you my thoughts, they're not coming from I just don't know what I'm talking about place. I've been through many markets. I've been through 2008. I've now been through, obviously, coronavirus. I'm telling you that in my experience, I feel like we may be at day one of a shift in momentum out of small caps. Okay? I hope I'm wrong, but that is my professional opinion. If you do not like it, that's what markets are for. Somebody has to buy a stock in order for somebody to sell it. That's what makes stocks go up and down. That's what I think. We'll see a week or 2 weeks from now. I hope I'm wrong. But I'm telling that my group, my community, I'm telling them to keep your head on a swivel, stay disciplined, don't chase, don't fall victim to FOMO, focus on singles and doubles, don't look for home runs, and you guys will be just fine. But do not let this exuberance, these 100, 200, 300, 700 JFIN today, 700%. Do not let these moves cause you to break your rules as traders and get caught chasing stocks, because eventually this momentum will cool off. This momentum will cool off. And I don't want any of my guys or gals bag holding a stock like JFIN from $25. A stock like GNUS from 11. A stock like, VAL from 225. Hertz from 6. I don't want any of my guys or gals holding on to those positions. Okay? So, food for thought. Food for thought. Yeah, and that dude, that's fine. Lou, if you disagree, I totally respect your opinion. But that's what makes markets. That's what makes markets. Okay? That's what makes markets. Listen, Lou, I hope you're right, man. I hope I'm wrong. I've traded nothing but small caps for the last 2 weeks. My big wins today were JFIN and AVCT. Yesterday, my big wins, IMRN again, and PLM. I've been trading small caps just like everybody else. I traded GNUS. I'm not in it anymore. I'm not in JNUS anymore. GNUS, I sold that thing days ago. VAL, I traded VAL. I sold that thing I sold that on Monday. VAL, I sold on Monday. I didn't trade Hertz. But yeah, guys, I just think that the momentum is going to slow down a little bit. And if we get an increase in volatility in overall markets because of spikes in cases, that will also potentially pull momentum out of small caps, because when you are looking at, you have to understand how momentum works, right? If you have take me, for example. I'm a day trader. I trade with very large size. When I'm trading small caps, that's several hundreds of thousands of dollars of liquidity between my entries, my exits, that I'm adding to the day on a small cap. Okay, I added a lot of liquidity to JFIN today between my buys and my sells. Same thing with IMRN. And if all of a sudden we have a day where the Dow is down 800, 900 points, the TVIX is up 25, 30 points. If we have a day like that, I'm going to be trading SPY options and the TVIX. So now that's going to be a couple $100,000 of liquidity that you're losing just from me alone. Now, what if take 100 traders like me that move their attention to SPY options, TVIX, UVXY? Well, now all of a sudden you've got millions of dollars of liquidity that is no longer trading a small cap. That's why I'm saying, with the bag holders that we have for newbie traders, newbies are bag holding right now. Experienced traders are ripping small caps apart. If you're a newbie, you're bag holding right now, because you're always late. You're always late. Okay? Newbies are always late with their Robinhood accounts. They buy the stock, they just hold it. They don't know they have to trade it, and then they lose money. So those traders could potentially be out. But then if all your experienced traders go to a TVIX or a SPY options, that's how small caps slow down. So I'm saying be conscious of this, be aware of this. So if it happens, you guys are ready and you can hit the brakes. You can hit the brakes, you can drop yourself down to first, second gear, and you don't stay in seventh gear if things slow down and you just gave back half the profits that you just earned over the last 2 weeks. You can't let that happen. You can't let that happen. Okay? Cannot let that happen. Okay? So I want you guys to be aware of that. So with that being said, if small caps do slow down and we get an increase in volatility, I'm going to be right back TVIX SPY options. TVIX SPY options. TVIX SPY options. That's where my focus will be. I know Jason's going to be right there with me with UVXY and SPY options. Jason will probably be in there with Apple options, probably somewhere around the line as well. That's what he trades. And if we get that volatility in the overall markets, and because we're seeing an increase in spikes in cases, I think it's a very big possibility. So I want to share this idea with you guys.
I'm so upset I sold those 153 IWM puts. Wish I could get that one back. All right, well, look, I agree with everything Mike said, and I'm going to let him handle the rest of this. I'm going to go watch futures and, see some Teen Titans with my kids.
Nice.
Guys, stop being, where just be smart with your money.
Yeah.
Tomorrow might be one of those days where the best trade is no trade. I have no problem doing that. There's going to be some opportunities, but yes, I'm going to be looking at IWM, puts, and UVXY and TVIX. That'll probably be my focus for tomorrow. So you're in good hands. Take care. Comb your hair. I'll see you guys later.
Later, bro. Later.
Peace.
All right, guys. So now let's get into it, right? I want to get into this JFIN trade with you now because the whole point of this live stream, I'm going to recap the trades for you guys. I'm going to recap the win too. The win was a huge win, and I'm going to also recap the loss for you because, like I said earlier, I gave a big chunk of my profits back. So I'm going to recap both trades for you. First, let's go over the winning trade, and then I want to show you, and then we're going to talk about managing risk. Okay, then we're going to talk about managing risk on these real high volatile names. Here is JFIN. JFIN was on my watch list, guys, with the action that I had here today. Early in the morning, the stock got halted, and then when it ended up making brand new lows, got halted again. I kind of lost interest in it. I was trading AVCT. Actually, I'll talk about AVCT real quick. This was a big win for us. Picture perfect trade line VWAP crossover. I will talk about, actually, you know what, guys, I'll talk about this real quick too. I'll go over this trade with you because this is actually a really good lesson. This is a textbook trade line VWAP crossover pattern that I want to share with you guys real quick. So AVCT, I traded this thing early in the morning. It was like I was basically break even. I got long there, sold 25% here. I'm going to go through this real quick, guys. I'm not going to go over the whole thing with you. And then I sold there and again there, and I was basically break even on that first trade. But to save time, we don't, because it was basically break even. So we won't really have to even talk about that. I want to save some time, so we're not on here till midnight because I really want to talk about risk management. But what you guys will see here is the trade line starts to hold support. The trade line is the 9 exponential moving average. Okay. And you see very clearly that VWAP is acting as an area of resistance. So this is what happens here. You're getting a battle between VWAP and the trade line. You see which one's going to win this fight. And what you see happen next is the stock pushes itself up over VWAP. When we push ourselves here up over VWAP, what I want you guys to notice is as we get over VWAP here, the increase in volume. You see how volume starts to increase. This is textbook trade line VWAP crossover. All right. Textbook trade line VWAP crossover. I come in right here and I get long in front of VWAP. I'll take you guys to my trade announcements on the day. Let me zoom in so you guys can see it was a pretty active day. Here we are, 10:04. Okay. Long ABCT at $4.20. Stop loss $3.90. Okay. So there I am long at $4.20. You can then see we get a pullback to test VWAP and the trade line. And what I want you to notice now is the slowdown in volume on the pullback. This is textbook, okay? And then you see we get a trade line VWAP crossover. The trade line crosses up and over VWAP for the first time on the day, and you get that big increase in share price. You get the big increase in trading volume, and this thing just never looked back. Just a rocket of a move right through highs, and I just start peeling profits off the table. My first take profit was right in front of the high of the day. 25% of my position. Here you guys go back to the alerts. Let me talk about the ad, the tier 3. I got to a max tier 3 at 462 once we got confirmation on the cross. So right here, guys, we got the confirmation on the cross. And then that's when I added to a max tier 3 position right there. Okay. So I added to a max tier 3 position. All right. For those of you that don't know, I trade in tiers. For me, when I'm entering a trade, tier 1 is 25% of my desired size. Let's say I want to buy 10,000 shares. Tier 1 would be 2,500 shares. Tier 2 for me is the other 75%. So I get up to my full size position. So if tier 1 is 2,500, tier 2 would be 7,500. And then tier 3 would be an extra 25%. So you essentially are getting up to a 125% position size. If I wanted to get to 10,000, that's my full size. I add to tier 3. That means I'm in 12,500 shares because all the stars align. I love what I'm seeing. I'm very confident in the trade. And that's when I'll add to a full size tier 3. Okay, so that's what I did there was I added to a tier 3. Excuse me. Then you see I took 25% of the position off the table at 497 in front of the high. We broke through the high, extended. I took 50% of my position off the table right there at $5. Where are we? $5.41. And then final take profit as we extended even higher at $6.10. Okay. So again, here's the first entry. There's the VWAP cross. There's the tier 3 add. Then 25% profit, 50% profit, 25% profit. And this was the first home run trade of the day. Okay. That was the first home run trade of the day. So I figured I would this is why I was not looking at JFIN at the moment. Once JFIN failed, was halted a couple times to the downside, I stopped looking at it because I was focusing on this AVCT trade. Okay. So that was how we started the day with that big, nice win on AVCT, and it kind of set the precedent for the rest of the day. And then JFIN came back to life. So JFIN, out of nowhere, I mean, this thing looked like it was dead. With the halts to the downside, the new low volume was just fading away. This thing looked like it was dead in the water. And then all of a sudden, out of nowhere, this thing just rips to a brand new high of the day with the heaviest volume of the entire day. When that happened, I said, whoa, this thing might have some juice. Okay. I said, this thing might have some juice. So let me zoom in again. There's your initial morning high. Okay. There is your initial morning high. Let me adjust this. Okay. There is your initial morning high. When we broke through it with the heaviest volume of the day, I bid right in front of it and got long on the pullback and retest. Back to the alerts. You guys can see here, I'm long JFIN at 1817. Stop loss 1650. Long at 1817. Stop loss is 1650. Okay. There's the entry. We almost instantly jumped like $3. So I said, wow, okay, let me take some profit off the table. So I took some off right in front of $21. Okay. So 25% of my position comes off the table at $20.89. Now I'm holding on to the rest of my position. Then we get another pullback and test of the trade line. This was a major, major moment for this stock because I want you guys to, again, look at the volume on the break through the high. Then you see this big drop, this big slowdown in trading volume as we pull back in to retest the initial morning high. And you also have the trade line sitting there. At that moment, when we went down there and touched 1750, members verify this. I said on the microphone in chat, if my TGD members that were in chat, if you're on the live stream now, you guys confirm this. I said in chat, guys, if we pull back in here to 1750 and we pop right back to $20, we're going to squeeze. I go, this is a very important moment. This trade line test is crucial. This trade line test is crucial. If we hold here, we're gone. Okay, that is what we said in chat. We pulled in, we tapped it, went right back up to 20, and then I'll take you guys back to my trade announcements. You can see here I added back to JFIN at 1950. So I added back to the full size position right there at 1950. And this thing just exploded. Exploded. Start taking profits off the table. 21.45, 25% of my position comes off the table. Then I took more off at 22.44. Let me draw them out for you. So then there's 25%, there's 50%, and then my final take profit right there, back to the alerts at 27.80. Final take profit at 27.80. Okay, so again, here's the entry. First take profit, added back to a full size position, 25% profit, 50% profit, 25% profit. Okay, so again, I love these small caps. I will trade these things until they are dead in the water. Okay, this volatility is insane. The P&L that you're able to pull out of these moves with the size of these moves, the liquidity that these stocks are trading, you can get position size and you can ride these things $10, $12, $15 a share. It's insane. Okay, it's just insane the action that we're getting, and these are monster gains. Okay, monster gains. All right, and that's really how the day started. So I start the day, I'm like, wow, this is nuts. I've got another home run day, monster P&L day. Yesterday was huge. Monday was huge. Today, I'm like, this is the biggest 3-day P&L streak I've ever had in my entire career. That's the action that we have going on right now. Okay, that's the action we have going on. Then I went after JFIN again later in the day. And I got a little too big on my position size, and I gave back too much of my profits than I should have. I should have finished the day with a much higher P&L than I did. Sorry, guys. I'm just trying to get caught up on some messages. Okay. All right, never mind, guys. Just thought I was seeing if I had to get caught up on some. If I had to get caught up on some messages. Okay. So let's talk about risk management. Before we talk about the risk management now in JFIN, I want you guys to really pay attention and listen up, especially now because of the volatility that and everything that's going on. Even though I think momentum is going to slow down in small caps, if it doesn't, I feel like you guys really need to learn and understand how to manage your risk on these type of stocks. These are not beginner level stocks. These are not newbie level stocks. Usually when you have stocks that are this volatile, the experienced traders rip them apart. The inexperienced traders struggle. And that's because the stocks move very quickly. And an inexperienced trader has a difficult time managing the risk with that level of volatility. It's easy to manage your risk with a real slow moving stock. When a stock moves $10 in a matter of 6 minutes, it's difficult for an inexperienced trader to stay focused on that, stay disciplined on that, and not be a deer stuck in headlights. Inexperienced traders, when a stock drops $3, $4, $5 against them, they freeze. When a stock pops $5, $6, $7, $8, they freeze. Okay? They freeze. And they start to break their rules. They don't take profits when their targets are met. They don't stop out when their stop loss is reached. If you don't have a physical stop, like I don't use physical stops, I use mental stops. But inexperienced traders, okay, are using, mostly physical stops. If, you have to stick to that. Okay, you have to stick to that to protect yourself. Before I get into the risk management part of this, there are we have 3 people. Am I drinking chocolate milk? No, I'm not. No, I'm not drinking chocolate milk. Let me see. Yes. All right. So Kim. Oh, Justin Fox. What's up, man? Justin Fox just joined up. Justin, I think you just joined up yesterday, right? Justin Fox says, I'm so happy I joined TTG. Best decision ever made in my life. I love winning when I start. Nice, Justin. Nice, guys. Very nice. What do I think about Boeing right now? I think Boeing, listen, Boeing, airlines, cruise lines, they're all due for pullbacks. Those stocks made massive runs that are unsustainable. These stocks were due for a pullback. This is not a sustainable move for a stock as large of a cap as Boeing is. Okay, the stocks were due for pullbacks. Okay, I think Boeing is a buy anywhere from 165 to 180 if you get that pullback. I think in 2 to 3 years, I think Boeing is back at $300. Okay, in 2 to 3 years, I think Boeing's back to $300. All right, so I'm long Boeing in my long-term portfolio. I have no plans on selling it. So like I was saying, let's get into the risk management part now, guys, of this JFIN trade. Before I do so, there's 3 people. Nice, Julius, what's up, man? Joined yesterday. Very nice. James Vetter, yes, James Vetter. Oh, my man, James Vetter. Already paid for my lifetime membership from Profits just this week. James, great job, man. You've come a long way, James. You've come a long way. Wall Street Wolf, nice. Biggest day of my career today. Insane action. Very nice, Wall Street Wolf. Great job, man. Great job. So yeah, guys, there's a couple people that were asking about memberships. So let me get that out of the way, and let me tell you guys about the membership, how you guys can sign up, and then I want to talk about managing your risk on a stock like JFIN because it's very important. Okay, so right now, if you guys want to join True Trading Group, because a couple people were just asking, how do you join? If you guys want to join TTG, we're going to post a link in chat for you now. Because right now you can get a 34% discount on a 1-year all-inclusive membership to True Trading Group. That 1-year membership is going to get you 1-year access to the chat room where I share my screen with you. I'm on the microphone talking you guys through my trades every step of the way. The key here to me being on the microphone is that I tell you what I'm doing before I do it. Most people don't do that. Most people buy a stock, they then tell their members buy it, they sell it to their members. I don't do that. I come on the microphone, I tell you guys every single time what I'm going to do before I do it. I say, guys, okay, guys, stock's trading at $10. I go, I'm looking for a pullback into 950. We get a pullback into 950, guys, I'm a buyer. So this way, when the stock pulls back in, a lot of members buy the stock even before I do. It's never a surprise I'm in a trade, ever. When I buy the stock, I'm always, guys, this is my stop loss. My first take profit's $10. I'm going to sell 25% there. My next profit target's 1050. 50% is coming off there. My final target's 1150. Let's see if we get it. Okay. I always tell people what I'm doing before I do it. I come on the mic. I go, okay, guys, first profit target reached, 25% coming off the table. Bang, comes off the table. I always. Okay. I'm always telling people what I'm doing before I do it. Okay. Okay. It's never a surprise. So you guys get access to the chat room for a full year. You get access to the mobile app. Okay. We have a mobile app that's available on iPhone or Android. When you download it, you guys, it's for members only. Obviously, I mean, you can download it, but you can't access it if you're not a member, because members get user IDs. Members get user IDs and PIN codes. So what you guys will be able to do with that mobile app is be in chat, hear me on the microphone still, even if you're not in front of your computer. So if you're driving in the car, you're at your kid's soccer practice, you're at work, you're in a meeting, okay, you can still follow along with what we're doing in chat because we also send push notifications. The app will give you push notifications whenever we enter or exit a trade. Okay, so when I enter and exit a trade, or any one of the other moderators enter or exit a trade, the mobile app gives you a push notification in real time. So even if you're not in chat, you can still follow along with what it is we're trading. You get a year also of email swing trade alerts. So whenever I enter a swing trade, you guys get an email, gives you the entry, the stop loss, the profit targets, the intended hold time, the whole thesis behind the trade. You also get access to the premium blog that's updated daily with trade ideas, trade recaps, general market commentary, educational info. All the moderators, we update that daily with different pieces of content. You get the stock profile section. You get the analyst report section. So if you're interested in Tesla, you can type in Tesla. You get a downloadable PDF report on the company and the stock. And then we also compile all the analysts that cover Tesla. So you can see if 20 analysts cover Tesla, how many have a buy, how many have a hold, how many have a sell. That's included. You also get our stock screener. We have our True Trading Group stock screener that just went live a few days ago. You get access to that, as well as what you're all probably are waiting for, the courses. With your membership comes included all of the TTG courses. That's the beginner stock trading courses. That'll start you off from day one. If you've never traded stock a day in your life, don't worry. Those courses hold your hand through the entire process. Then you have the advanced stock trading courses. That's where you get into the more details of what I learned working at a hedge fund. I wrote these courses myself. It's the same information that I received working at the hedge fund. I went through a 3-month educational program at the hedge fund where I sat in a classroom for the first 3 months of my employment, and I learned. I had to pass that program before the hedge fund let me trade on the floor with their money. Okay, so I've taken all of that information, I've simplified it, and I've created the courses. That's what you're getting. You're getting a professional hedge fund education. Okay, that's the advanced courses. The advanced courses are going to cover the tier trading strategy, my risk management, the patterns I like to trade, technical indicators I use, how indicators work in conjunction with one another, how to stay in winning trades longer, how to keep losing trades small, so much more. How indicators work in conjunction with one another, so how you can say this bull flag is an A+ setup, this bull flag is a C setup. Okay, so you guys can see all of that. All of that's included in the courses. You also get the intro to options trading, which is basic buying and selling calls and puts. Advanced options, which covers straddles, strangles, debit spreads, credit spreads, iron condors. You get Trader Psychology Part 1. You get Trader Psychology Part 2, which is designed to help you trade more robotic and take a more statistical approach to trading to help remove emotions. Okay, that's what the Trader Psychology courses are designed specifically to do. I know that was the biggest breakthrough for my trading. I was a mental nutcase when I was young in my trading career. When I was working at the hedge fund, I never had a problem with big wins. I always had big wins, but I also had really big losses too. And it kind of kept me in the mud. Like I felt like I was running on a hamster wheel. I would have these huge wins and I would have these huge losses. And I was a mental nutcase when I was younger. And it was when I got my psychology under control and my emotions under control that's when I really started to catapult. And then the very next year, direct correlation between when I got my emotions under control, the very next year, I won Trader of the Year. That was in 2008. And I got promoted to a junior portfolio manager from an equities trader. Okay, so direct correlation from getting my emotions under control to becoming a better, more successful trader. That's why we surveyed True Trading Group members, and the most common answer for what's your favorite course was Trader Psychology. Okay, you guys get access to all of this with your 1-year membership. Use coupon code TTG620. That's going to get you a 34% discount on that 1-year membership. And if you sign up by midnight tonight, you're going to get a one-on-one mentor session included for free with your membership. So you're going to get all of the features the True Trading Group membership comes with. You're going to get all of the courses, which are the same information I learned working at a hedge fund. You're going to get the mobile app, all my trade alerts. You're going to get my real-time analysis on the mic, my screen share throughout the day, all my trade alerts. And you're going to get a one-on-one mentor session, and you're going to get a 34% discount using the coupon code TTG620 before midnight tonight. We also have a Trader Palooza event that's taking place on Saturday. Let me tell you guys about that real quick, and then we're going to get into risk management. Trader Palooza. I'm hosting a virtual trading seminar for TTG members only on Saturday from around 8:30 a.m. till around 8 p.m. at night. We are going to have myself and the other TTG moderators are going to be presenting different topics at 1-hour increments. So I'm going to be sending out an itinerary where 8:30 will be like a meet and greet. It'll be a welcome. It'll be like kind of like the morning breakfast session. Kind of just go over what you guys can expect. I'll do a little bit of a Q&A session, and then we're going to get into the topics. And every hour, myself and the other moderators, so you have me, you have Jason Spadafora, the Wolf of Wheat Street, you've got Jason Simmons, Alex Campbell, Jay Downing, and Chris Toner. Those are the TTG moderators. We are all going to be presenting different topics at different times throughout the day. So I'm going to send everybody an itinerary. So let's say if you want to be there for my risk management course, you want to be there for my TTG Triangle course, and then you want to be there for Alex Campbell's cryptocurrency course. Then you want to be there for the Wolf's cannabis stock breakdown. And you guys can come into the seminar at the specific time slots that topic is going to be discussed. And then you can log out and then you can come back later. But we're going to be doing that for the whole day on Saturday. It's called Trader Palooza. It's for TGD members only. So you guys sign up tonight with the TGD620 coupon code. you get the 34% discount, you get the free one-on-one, and you get access to the Trader Palooza event. All of this for just over $1,000. It's less than a cup of coffee a day. The regular membership is usually $1,665. With this coupon code, it's only $1,089. It's literally like $2.50 or $2.40 a day, something like that. I forgot what the math comes out to. It's something like that. It's like a cup of coffee a day. You guys get all of that. Okay, all of that. Sign up tonight by midnight. Okay, so that's the membership. Okay, that's the membership. Okay, so some of you guys were talking about membership questions. Now let's get into JFIN. Give me a second here so I can have a sip of water because my throat's killing me from talking so much. Whew. I get carried away sometimes, don't I? I'm just so passionate about this stuff. Oh, man. Nice, Jake B. My man Jake, what's up? Jake B's. Oh, he just says, the trader psychology is absolutely legit and has been extremely helpful. I can't say enough about trading the chart, not your P&L. Great courses. Awesome, Jake. I'm glad you like it, man. Yeah, like I said, most members say that that's their favorite course. I think it's the game changer. I think the trader psychology, why does nobody else talk about that? It's literally the most important part of trading. 80% of trading is mental. You and I see the exact same chart. You and I see the exact same indicators. So why can I buy a stock and I'll make 20 grand on it? You'll buy a stock and you'll lose 2 grand. How's that possible? If we're both looking at the exact same chart. Once you learn technical analysis, what takes you to the next level as a trader is not necessarily a more profound understanding of technical analysis. It's mental growth. It's mental discipline. It's understanding that trading is statistical, not emotional. It's becoming more robotic instead of human. Okay? It's dealing with big losses. It's sticking to your rules. It's taking profits when your profit targets are reached and not being greedy. It's identifying A+ setups and having the patience to wait for A+ setups and not get sucked in to a B or C quality setup. Okay? All of these things are what makes the difference in a trader's development. I just explained to you my own development at the hedge fund. When I went from where I was at to being promoted and winning trader of the year, I didn't get a better understanding of technical analysis that caused that to happen. It was mental maturity from my mentor, mental maturity from my mentor who helped me grow and develop psychologically that got me to the next level. If you're a trader that's consistently profitable, let's say you're making 10 grand a month, but you want to take your trading to the next level. Going from 10 grand a month to 25 grand a month, going from 25 grand a month to 50 grand a month, going from 50 grand a month to 100 grand a month, it's usually not some newfound understanding of technical analysis. It's mental growth that gets you there. Technical analysis will get you to be profitable. Mental discipline, mental maturity will take you from just profitable to I'm doing this for a living and I'm living a damn good life. It's not technical analysis. Technical analysis will get you from I'm losing money to now I'm no longer losing money, now I'm making money. But to make the big money, that's all up here. And nobody talks about it. Nobody talks about it. I think it's the most important aspect of the teachings and the education that we provide at True Trading Group. Never mind you're getting professional technical analysis. You guys are understanding technical analysis the way I learned it working at a hedge fund. This isn't like a little gimmick that I figured out in my pajamas in my mom's basement or in my college dorm room. This is what I was taught by hedge fund traders. And then you have the psychological aspect of it. When you combine those two things, you become a dangerous trader. Let me tell you, you become a dangerous trader. When you combine professional technical analysis with professional psychological training and mental discipline, that's when you reach your potential. That's when you break out of your shell. That's when you jump and you make the leap as a trader in your development. Okay, so you guys get all of that stuff included in your membership. Remember, use that coupon code TTG620, and I'll see you guys in chat. Okay, now let's talk about risk management. JFIN, extremely volatile stock. Okay, extremely volatile stock. I don't want new traders and inexperienced traders to be scared of these stocks. You're scared of them because you don't understand risk management. You're scared of them because you say, man, this stock moves $5 in the blink of an eye. I'm scared of it. You have to learn how to slow a stock down. This is part of risk management. The proper way to manage position size and risk with any stock, but it becomes even more important with the stock as volatile as JFIN, is to ask yourself, how much am I willing to lose on one trade? What's my risk per trade that I'm comfortable losing? Let's say that number for you is $1,000. I'm making up a number. It can be $100. It can be $500. It can be $5,000. Doesn't matter. Everyone has their own risk tolerance. Okay? You've got to ask yourself, what's the number you're comfortable with? Let's say it's $1,000. If you're comfortable losing $1,000 per trade, when you are about to buy a stock, let's use LFIN as an example. Okay, let's use LFIN as an example. Let's say LFIN, here's a nice little support level, right? Here's a nice little support level on LFIN. This is just an example. And let's say the stock is trading right here, and you say, I want to buy LFIN. Okay, well, if you buy JFIN, I keep saying LFIN. LFIN was that other crazy stock that ended up getting halted. JFIN, I keep saying LFIN. Sorry, guys, JFIN. So JFIN is trading here at $24. So let's say if you bought the stock right now, when you want to, it's $24. This support level is below 20. Right now, this is at 1985. So this is the support level. So let's say JFIN does that. You can't stop out of the position. It's still above the support level. You stop out of this position when the stock breaks below the support level. Okay? So if you bought the stock right there, you would say to yourself, my stop loss is right there. There's your stop loss, just below the support level. So now you say, okay, if I buy the stock at 24 and I stop out, I'm going to lose $4.50 from 24 to 1950. Your risk on this trade is $4.50. Okay? You have to then figure out if $1,000 is the risk you're comfortable with per trade. Now, what's the position size that if you lose $4.50 a share equals $1,000 loss? Let's do the math. You're looking at 225 shares. So if you were going to make this trade, you would buy 225 shares right there at $24. And if the stock does that, you get stopped out and you lose $1,000. What a lot of traders do incorrectly is they buy the stock here with a random position size. If you ask me, Mike, what's your position size? What's your average position size? Right away, I know you do this wrong. If you are concerned what my average position size is, I know already you do this wrong. What you should be asking me is, Mike, what's your average risk? What's your average risk per trade? That's what you should be asking, because my position size varies every single trade. I could have a $900,000 position. I could have in a large cap stock, in a stock like maybe Apple. I can have a $100,000 position in a small cap stock like maybe ABIO. And then I can have a $10,000 position in a same day SPY put option and still have the exact same risk on every single trade. Because the risk varies, the volatility varies from stock to stock, from trade to trade, from setup to setup. Your position size is going to change every time. But your risk does not change. You must maintain consistency in your risk. You do not maintain consistency in your position size. If you say, oh, Mike, I trade with $5,000 position size, or you say, oh, Mike, I trade with $50,000 position size, what does that mean? So if I buy a SPY put option, are you going to put $50,000 in that SPY put option? You're going to risk 25 grand on that trade? If I buy Ford one day, you're going to buy $50,000 worth so you can make $100? Your position size needs to vary trade by trade. Your risk does not. That's the first thing you have to understand with any stock, all trading, not just high volatile stocks like JFIN. It's just even more important with a stock like JFIN. Because a stock like JFIN can move $4 in the blink of an eye. And if you're not prepared with this, you're going to panic when the stock drops. So an inexperienced trader is going to buy the stock right here, more position size than they're comfortable with, and they're going to set their stop loss right there. Because that's all they're comfortable losing. And then what's going to happen is the stock's going to do that. They're going to get stopped out. The support level is going to hold. And then the stock's going to go. And you're going to say, oh my God, I can't believe I always get stopped out and the stock goes higher without me. The reason why you're getting stopped out and the stock's going higher without you is because your stop loss is in the wrong place. And your stop loss is in the wrong place because your position size is too big. And your position size is too big because your risk management is flawed. Your stop loss needs to be where it belongs based on the chart setup, not based on some arbitrary number that you're comfortable with because you have too much position size. Lower your position size so that you can handle a stop loss being down here. Give the stock the room that it needs. And when the stock pulls in $2.50, you're not freaking out. This is how you slow down a stock's movement. This is how I can enter a stock like JFIN. It can drop $3, then bounce $4, then drop $3, then bounce $2, then drop $3.50, then bounce $2, and I'm just sitting there like this. Meanwhile, an inexperienced trader is like this. Don't be this guy. Be this guy. But you can't do that if you don't have your risk management down. And it's important to do that on a stock like JFIN. Very important to do that on a stock like JFIN. Okay? Moving forward, let's talk about the losing trade that I made in JFIN, because this gets into another level of risk management. Okay? Another level of risk management. JFIN, looked to me like we were holding above the previous high, which also lines up with VWAP. Okay, which also lines up with the 38.2 Fibonacci level. Okay, you guys see the support level here? So what I was looking for was for this stock to break up and out of this triangle pattern and squeeze. This is almost an identical chart setup to IMRN. Almost an identical chart setup to IMRN. Now, I got long a tier 1 position right here. Take you guys to my announcements. Here you guys can see at 1204, long tier 1 JFIN at 2350. Okay, tier 1 at 2350. Now, what you learned from earlier, tier 1 is 25% of my desired size. Okay, it's 25% of my desired size. Okay, 25%. So if you wanted to buy 1,000 shares, you would only be buying 250 at this point. Okay, so there I am, tier 1. And I said, I'm going to add tier 2 if we break up and out heading out of lunchtime. Okay, if we hold this level all throughout lunchtime, I thought we had a chance to squeeze. This is an identical chart setup to IMRN. Coming out of lunchtime, it's 2 o'clock. I add to my position. Okay, I added tier 2 at 25.51. And then you got the gigantic rug pull. And I exited my position right there. Back to the alerts. You can see here I sold out JFIN at 2023. Okay, 2023. Now, this stock dropped so fast on such low volume that it was like everybody just got stopped out at the exact same time. Okay, on this trade, I gave a lot of my profit back. Still green on the day, but I should have been much, much, much bigger green. Okay, gave some of that money back. So upset with myself for giving a big chunk of those profits back, but there's a lesson to be learned here. A lot of people that I know gave all of their profits back. Some people went red. You can never allow that to happen. If you are going to be trading a stock like JFIN, I plead with people all the time. Understand the risk of the stock you are trading. Understand the volatility of the stock that you're trading. Understand it. Adjust your position size to account for that extra risk. The risk reward is there. If this stock squeezed, it would have went to $40 if it squeezed. Okay? It would have went to $40 if it squeezed. So the risk reward is there. Manage your risk by adjusting your position size down on a stock like JFIN. Okay? And say to yourself, okay, if I'm up X amount of dollars because you killed the first trade, let's say you nailed this trade with me. Okay, if you nailed that trade with me in the morning, you're up big. You're up big. We bought this thing at $18. We sold it at $28. You made almost $10 a share. You're up huge. You have to protect those profits. When I go back into a stock, when I go back to the well, let's say I crush a stock. Okay, I just absolutely crush it. Huge gain, and I'm going to go back. I'm going to trade the thing again. I do so with slightly smaller position size or slightly smaller risk than the initial trade. Okay, let's say, for example, the first trade you made, you were risking $1,000. The second trade you make, only risk $750. That's going to make sure that all of the profits, let's say you risked $1,000 on the first trade and you made $3,500. Now you're up $3,500 on the day. When you go after it the second time, don't risk $3,000 now. Don't double or triple your risk because you think you have a cushion on the day. Protect those profits. So instead of risking $1,000, risk $750. You're already up $3,500 on the day. So now if the trade works out and it squeezes, now you went from being up $3,500 on the day, now you're up $5,500, $6,000 on the day. But if the trade doesn't work and it fails, Instead of you being up 3,500, you're up 2,500 or 2,000, which is still a nice day. Don't allow yourself to go from up 3,500 to then down $1,000 because you didn't manage your risk properly in the beginning. Don't ever allow that to happen. That's horrible if you allow that to happen. So this is where managing risk on extreme high volatile names like a JFIN is grossly misunderstood, is grossly miscalculated and implemented wrong by most traders. You're not most traders anymore. You're part of the TTG community now. You're getting a professional hedge fund education. You're not a newbie. You're not a rookie. You're not a furu. You're learning a professional trading strategy, professional risk management. You know better than this now. Don't be like the other traders that don't know what they're doing, that are making all of these mistakes. Because all of these mistakes make a drastic difference in the end of your month P&L. A trade like this can be the difference between you being green on the month or red on the month, even though it's only June 10th. That's how big of a P&L swing that you could have had. You could have been up $5,000 on the day to down $3,000 on the day. That's an $8,000 swing. You can't allow that to happen. Okay? You can't allow that to happen. I gave back a big chunk of my profits, but I'm still green on the day. Okay? I would never allow myself to be up huge on the day like we were in the morning and then allow myself to go red. You just can't do it. Not only is it shitty for your P&L, but it sucks mentally. Like, it's demoralizing when you go from up big to then all of a sudden you're red on the day. That hurts mentally, psychologically. It does damage to your psyche. It does damage to your mental capital. It's not just about your financial capital. It's about your mental capital. And something like that sucks. Sucks. So don't allow it to happen. Does anybody have any questions about what I just discussed? Now's your time to ask. Manuel, the volume, it's relative to the stock you're trading. Okay, it's relative to the stock you're trading. Okay, so Manuel's question is, Mike, how much volume do you need to add to a position? I noticed in chat that you kept on saying when we were looking to add to JFIN that we need the volume, we need the volume, we need the volume. The volume is going to be relative. It's not like a specific number. It's not, okay, we need 500,000 shares. Okay, the volume is going to be relative to the stock you're trading. So in order to add to my position, I'm going to want to see heavy volume on the day. Okay, when you look back at the trading volume of JFIN on the day, right? Your heavy volume candles are up here, million share candles, right? Here's your heavy volume, and then you can see here's low volume. Okay, you see the difference? It's relative to the stock you're trading, Manuel. Okay, it's relative to the stock you're trading. So here is heavy volume. Here's low volume. So it's relative to the stock you're trading. So what I would like to see when it's time to add to the position would be volume that would be similar to the volume we saw early in the day when it had heavy volume. So it's going to be relative to the stock that you're trading. Okay? It's going to be relative to the stock that you're trading. Thoughts on an overnight position, Ryan? I'd be very careful. I'm pretty sure they have earnings tomorrow. I'm pretty sure the CEO. Part of the reason why the stock dropped was the CEO was asked about the price action in the stock, and he actually said, "I have no idea why the stock is up so much today. We're due to report earnings at 8 a.m. tomorrow." So if you're long JFIN, I would make sure you're at your desk pre-market if they do release earnings at 8 a.m. Yeah, hindsight, of course. Ask a question. Yeah, of course, Glenn. Go ahead. Hindsight. It's not that I didn't like Chris. The thing I didn't like about Chris was the time of day. So Chris was a very nice setup. Okay, Chris was a very nice setup. Okay, there is your setup. You got your break up and out, nice increase in volume. Okay, then we failed at that 12 to 15 level, but this was still a very nice trade. I was just focused on JFIN, honestly. I was focused on JFIN, and a stock like JFIN requires my full attention. If I'm trying to trade size in a stock like JFIN, it requires my full attention. So hindsight, honestly, like we talked about, Chris, we talked about that pattern and setup. I just was not comfortable. If I'm trying to trade size in a stock like JFIN, I'm just going to focus there and try not to get distracted with anything else because, how fast JFIN can move, how fast this stock could either go up or down. I just wanted my focus to be there. Nice. Anver Coloni. Come on in. Anver Coloni, come on in. I'm here, buddy. I'm here. I'm ready when you are. Oh, nice, Glenn. Glenn had a big day today. Glenn, congratulations. Dennis says, when do you start having mental stops instead of regular stops? You have to be disciplined. It's about discipline. You can only start using mental stops when you know you have the discipline to actually stick to it. If I say my stop loss is the $5 area, and if the stock gets to 490 and you don't do anything, then it gets to 485, you still don't do anything. Then it's at 475 and you still don't do anything. You can only use mental stops if you're disciplined enough to stick to them. If you're not disciplined enough, and don't lie to yourself, you're not hurting anyone but yourself if you lie to yourself. You have to really ask yourself, are you disciplined enough to stick to your stop loss? Or do you sometimes become a deer stuck in headlights and you get caught in your position and you don't know what to do? You have to ask yourself that. Okay, you have to ask yourself that. I don't understand your question, Chris. Oh, John, yes, of course. Is $100,000 a year? Um, oh no, is $100,000 a year unrealistic? No, not at all. Not at all. We've got a ton of TTG members that make more than that a year trading. Some of them are even part time. Annie G says, TTG a one-time payment or can I pay it off monthly? Annie, we have two options. You can either do a one-time payment with a 34% discount, or you can pay off a 10% discount over a 3-month period. So we do have a payment plan, but it's a 3-month payment plan where you guys can pay it off over 3 months. But the coupon code TTG620 is for the one-time payment. Chris Crawford says, do you set market orders when your stop hits, or do you set limit orders? Market orders always when I'm exiting a losing trade. When I'm exiting a losing trade, I don't want to get cute, guys. I just want out. If I'm wrong, I'm wrong. I just want to get out. I don't want to potentially lose more money by my limit order not executing. No, Kim, it will not take you 16 years. It will not take you 16 years. Yes, Nick Jones, you definitely could do that. That is possible. Yes. Can you make $100,000 a month with $50,000 trades? Yes, you could. You could. You'd have to be good. You'd have to be good, but it is mathematically possible. Yes, Timothy, the stock halted. It was a volatility halt because it was dropping so fast. It was a volatility halt. AGB soccer. I actually think small cap momentum might slow down a little bit, and I think we might get some volatility pickup in. I think we might get some volatility pickup in the broader markets. So I actually think that we might have like SPY options, TVIX, UVXY. I think we might have some of those trades. Nice job, Glenn. Glenn Wilson, TTG member, already up 78,000 this year so far. Excellent, Glenn. Absolutely excellent. A typical size to start your account off with, guys. It depends. Everyone's different. Everyone's different. It's whatever you can afford. Some people start with $500. Some people start with 50 grand. Like everyone's financial situations are different. So you start with whatever you can afford. No, to make $1 million a year. No, it's not unrealistic. It's not easy to do. There's not a lot of people. It's not. I mean, but I do know people that do it. Holy shit! AGB soccer, my man. Hell yeah. Congrats, man. AGB Soccer says, Mike, thanks to studying your videos for the past 6 months, I was able to make 10 times on my account since March. Thanks and keep crushing, brother. Hell yeah. Hell yeah. Sick. Nick Jones says, I just got my membership. How long does it take for my one-on-ones to go through? So Nick Jones, I highly recommend if you guys are so Nick Jones just signed up. So if you guys sign up before midnight, you get included a free one-on-one mentor session. So what I recommend is before we do our mentor session, Nick, and anybody else that's joining tonight, go through the courses first. Okay? Go through the courses first, then schedule your one-on-one. The one-on-one doesn't expire. Okay, you can do it in 2 months, 3 months, 6 months, 10 months. The one-on-one doesn't expire. I suggest go through the courses because the courses are going to answer a lot of your questions. This way, when you're done with the courses, you're going to have a whole different set of questions that are going to be more detailed. And then we can do our one-on-one and we can really dive into some detailed topics and where we can really make some adjustments in your trading, talk about your strengths, your weaknesses, and where we can make little tweaks and maybe implement some new rules for you and kind of change your strategy a little bit to get you to become more consistent and more profitable. Okay, so I would say go through the courses first and then schedule your one-on-one. Chris Bostis, you should. I usually tell people not to risk any more than 3% of their total account on one trade. So I say anywhere from 1 to 3%. It usually falls around 2%, 2.5% of your total account value per trade, not per day, per trade. Yeah, Nick, just send an email to info@truetradinggroup.com. Yeah, Nick, no problem. Just send an email to info@truetradinggroup.com. Vic says, what is your biggest, humblest loss? My biggest loss was like $92,000. That was my biggest loss. My biggest loss was $92,000. Yes, Ali, there's exams. Yes. So Ali says, are there exams in the courses? Yes. So at the end of each course, guys, is an exam. So when you finish the course, you go through the exam. If you score an 85% or higher on the exam, you get a badge for that course. Earn all the badges for all the courses, you become TGG certified. TGG certified is really cool because it lets you know, it lets other people know that you've completed and received a professional education. So your opinion means something now. You know what you're talking about. Okay, when you become TGG certified, you can print out a certificate, you can share it on social media. It's really cool. David Ann says, can I know what you traded on that loss? It was Baidu. It was Baidu. I was actually short Baidu going into earnings, and they pre-announced earnings, and the stock gapped up some ridiculous amount, and I got smoked. Yes, that's a good question, Wall Street Wolf. Wall Street Wolf says, Mike, how long did it take for you to get to your current risk tolerance, and do you ever plan on increasing it further in the future? Yes. Yes, I definitely do plan on increasing it in the future. How long did it take me to get to this current risk tolerance? I've been at this risk tolerance now for about, it's really just really this year. Really this year? Yes, Joseph. That was God, what year was that? That loss was, oh man, I don't even remember what year it was. It was years ago though, Joseph. Yeah, it was years ago. I learned my lesson after that. Let's say that. I no longer hold big positions going into earnings anymore. Literally, that was the last time I held a big position going into earnings. Literally the very last time. Ambe Julius says, Mike, where can I get my room ID for the Android chat? Just joined TTD yesterday. So for TTD members that want to download the mobile app, you just go to the Android or App Store on your iPhone, search True Trading Group, download it. And then when you go into the chat room on your desktop, in the upper left-hand corner of your screen, when you're in the chat room, is going to be 3 horizontal lines. Click that. Some information will drop down. You're going to see a button. That button's going to say mobile app info. You click that button, it gives you all the info. Yes, James Earl Scones, exactly. So James Earl Scones says, so Mike, no matter what stock you're trading, your risk is, let's say, $5,000 a trade, and you adjust your position size according to the chart and the volatility of the stock. Exactly. So your risk remains constant. Your position size changes to equal that risk, depending on where your stop loss needs to be. Nice. Hubie successfully completed course 1. Nice. Stephen Arbor, great question. Stephen Arbor says, Mike, on your tier 2 JFIN ad, the volume on that candle was approximately 500K versus 7 million size candle on the first trade. Was this enough volume to give you full confidence to enter tier 2? So great question. This actually really kind of caught a lot of people by surprise because you had this flurry of volume and then it just stopped. So those 500,000 shares came in fast and then they just stopped. And that's when it just went right back the other way. So I wasn't necessarily waiting for that candle to close. I just saw all the volume start to come into the stock just by watching the order flow, and I just jumped in with it. But yes, obviously hindsight, you would have wanted this volume to have been much bigger. But good question, Stephen. Very good question. KC Hawkeye with the question of the night. What made you start TTG? I'm glad you asked because I'm going to tell you. It's a hell of a story. What made me start True Trading Group? So I've always helped people. I've always taught friends and family, how to trade, gave them investing tips. I've always helped people. My friends know what I do for a living. They always would ask me for help. My family knows what I do for a living. They would always ask me for stock advice and trading advice. So I was already very used to kind of helping people and teaching people and sharing my knowledge and education and experiences with people. I was at a family party. And a relative of my brother-in-law, he's a very active trader. And he knows what I do for a living, so we start talking. He's asking me about certain stocks, and we start talking. He tells me about this penny stock that he bought. And what I think about it, I'm like, I've never even heard of this stock a day in my life. I don't know. I have no idea what the company does. I've never even heard of it. So then we pull up the chart, and he's like, oh, well, this is so-and-so pattern, and this indicator and I was taught to do this. And I'm like, what? I'm like, what do you mean you were taught to do that? What he had said to me was the most asinine thing I've ever heard in my life. It made no sense whatsoever. And he's like, yeah, this is what this guy that I paid for this trading course, and this is what he says that, this is this type of pattern. And I went, whoa. And then he told me how much he paid for that course. And he paid like $4,500. And I was like, you mean to tell me that you paid somebody $4,500 to tell you that? Whoa. I go, dude, that's wrong. That is the complete wrong way how to use that indicator or that chart pattern. Completely wrong. You're going against all of the probability. You're swinging for a home run, but the probability of you connecting is very low. I was like, that's the complete wrong way for you to be trading. That trade's going to fail on you way more than it's going to work itself through. That's where the idea, that's where the seed was planted. Then I start looking around, I start to see all these other services, these other groups and communities that are out there. And I realized how full of shit they all were. Excuse my French, but it's the truth. I see these people that are talking about my house, my car, these stacks of cash, and I'm just like, follow me and you can drive this car too. And I'm like, this is the most ridiculous stuff I've ever seen. There's zero education. It's selling you a lifestyle, saying if you follow me, you can live the way I live. And then when you join these communities, you don't actually learn anything. You're just taught to follow the leader. And if you don't make money, you did something wrong and you're stupid because I'm the leader. I made money. If you didn't, you did something wrong. And I'm not going to tell you what you did wrong, but you just obviously did something wrong and it's not my fault. That's how the majority of all these other groups and communities were run. And I'm like, this is such a shame that you have hardworking people that are just trying to further their education, develop a new skill set to help earn a better living for themselves and their family, and people are taking advantage of that desire. Anybody that has the desire and motivation to invest in themselves, to learn a new skill that could potentially better their lives and their families' lives, if someone preys on that person's desire and motivation, it's criminal, in my opinion. And it really pissed me off. And I realized that there's such a gap, there's such a hole of real education when it comes to trading. You could go online and learn how to teach yourself anything. You want to learn how to bake a cake? Google it. You want to learn how to change the oil on your car? YouTube it. You want to learn how to give an infant CPR? Google it. You can learn a million different skill sets, but you can't learn how to trade. Why is it that the only way for you to learn how to trade is to work on Wall Street? Why is the only way for you to get the education that I received is to work at a hedge fund that manages $500 million? Why can't you go online and learn how to do that? Because when you do go online to try to learn how to do that, you're fed a bunch of bullshit. You're not really taught how to do it the right way. And that's how True Trading Group came to be, where I was like, there is such a gap to provide an educational service to people that can really teach them how to do this. And I said, let's do it. I'm going to start it. I'm going to call it True Trading Group. And that's why it's not called michaeledward.com. It's not called mikesbesttrades.com. It's True Trading Group. And it's true because it's a true professional education. It's not a gimmick. It's not some BS nonsense. And that's why when you guys join True Trading Group, you get access to everything we have. It's like Netflix. There's no upsells with True Trading Group. It's like some of these groups, they're like, oh, it's $150 a month. Then you sign up and you're like, okay, well, when am I going to learn something? Like, oh, you want to learn? Oh, well, that's $2,000. If you want the courses, that's $2,000. Oh, you want to actually talk to me? Well, that's my VIP inner circle. That's $7,000. If you want to talk to me. It's like, who the fuck are you? Like, these people just want to learn. You know? That's why there's no upsells at True Trading Group. When you guys sign up and you become part of the TGG family, you get access to all of the courses. Okay? The beginner stock trading courses, the advanced stock trading courses, beginner options, advanced options, trader psychology part 1, trader psychology part 2, how to thrive during a stock market crash. And get this, when I come out with new courses, which I do every so often, I come out with a brand new course, you guys instantly get access to that. It's not like, oh, hey guys, here's a brand new course. Oh, by the way, it's another $300. No. When Netflix comes out with a new documentary, do you have to pay for it? No, it's included in your membership. Same thing with True Trading Group. So as a member, you guys get access to all of this. Okay, you guys get access to all of this. Okay, so again, you guys have less than 2 hours left. Sign up before midnight tonight. You guys will get a one-on-one mentor session included with your membership for free. You get all the courses for free, the same information I learned working at a hedge fund, the mobile app, the email swing trade alerts, the premium blog, the stock screener, the stock profile, the analyst reports, everything. You guys get access to all of it. The chat room, obviously, as well as a 34% discount using the coupon code TTG620. All right? Top of my watch list, Dust One, honestly, is actually going to be the SPY. I'm going to see what the SPY does tomorrow. The SPY kind of got beaten up a little bit here after hours. I'm actually going to keep a close eye on the SPY and see if that gap down extends tomorrow. If our gap down extends tomorrow, we might see a little bit more follow through to the downside. So I'm actually going to pay very close attention to the SPY going into tomorrow. All right? Okay, guys. That's it. Awesome live stream. You guys were fantastic. I hope you guys learned something. This was a great stream. We talked a lot about risk management. We talked about the JFIN trade. I hope you guys took some notes. Go back, review, watch this video. You have less than 2 hours remaining to get that one-on-one mentor session included for free with your membership. Use that coupon code TTG620. Join the TGG community. Stop with all the nonsense. Stop with all the bullshit. Learn a professional education, a professional trading strategy. Come in chat, join myself, the rest of the crew. And if you sign up, guys, before Saturday, you guys can come to the Trader Palooza event, which is going to be a virtual trading conference that we're going to host for the whole day, but it's TGG members only. All right? Great stuff tonight, guys. I'm going to try to get to bed early. I'm exhausted. Haven't slept the last couple of nights. I'm going to try to get some sleep. TTG620. Join me and the rest of the gang, guys. Invest in yourself. Let's kick some ass and take some names. I'll see you guys in chat. Later, guys.